Hello everybody and welcome to the midweek market update from Smack the Markets for the 12th of August. So this week so far we've had quite a bit of volatility in the markets, particularly metals and also the stock indices. It's been battered backwards and forwards on whether we're going to get another stimulus package from the US. That's still being negotiated at the moment. Virus vaccines, of course, and also the impact of job numbers this week, or unemployment numbers I should say, and the impacts on GDP. So quite a bit of information for the markets to digest this week, and it's been flipping between a risk on and a risk off sentiment as the week's been progressing. So let's take a look at the markets that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. So if we take a look at the Dow first of all, and if we see this on the 4-hour time frame, we can see that the market continued to edge up higher in the start of the week. Then we had the massive sell-off here as the concerns over coronavirus increases and lockdowns in Asia and Asia Pacific area started to impact on the markets, and now we're starting to get a technical bounce off the 27,700 level. So from a technical perspective here, things still looking particularly nice, and this just looks like a healthy retracement. So again, looking at the markets here, we've got the price at the moment is in between a trading window from 27,800 up there to around that 27,930. Getting above there, we've got up there to those highs around that 28,000 price point. I wouldn't be at all surprised if we start to see a push up here towards these highs, particularly that 28,000 throughout the remainder of the week, and we'll certainly be looking at opportunities trading these markets within those trading windows. Now if price does break below the lows here and takes out this recent sort of swing low, then we can look forward to a much deeper retracement, and that may well have larger implications on future direction for these markets. So I think the near term we could be seeing a retest of those highs. So if we come and have a look at gold now, on gold we've had quite a retracement here. We're looking at this market on Monday. The market had come back into these sort of points here on the sort of 8-hour chart and also the 4-hour chart on Monday. We're looking to see if the market would find a bit of support here and continue higher. Overall we were expecting a bit of a deeper retracement, but if this these markets have been so strong, we could have easily have had a bounce here. Now there was actually a bounce here. It gave us some intraday plays here, but the longer term swing, as we can see, really took this market down to some much deeper retracement. Now even though the reasons behind the retracement here was on the back of vaccine developments reportedly from Russia, that then had an impact on markets. So the markets that cyclical markets and markets that hadn't normally been priced in as a fast recovery suddenly started to get priced in. So there was a risk on sentiment flooding through the market, and we had metals being sold off here. So that's what liquidated these positions. But if you can see, it's just actually pulled back into a technical level at 1950. So price just sort of getting above here at the moment, and I think longer term, the gold, the intrinsic value here for gold is much higher than these highs. So I wouldn't be at all surprised if we get a continuation in the long term. It's just how this is going to continue throughout the remainder of the week. So what we'll be looking for now that the market is getting above these levels, if we have a look at this on the 4-hour time frame, we can see that we've got some structure points here. So possibly up here towards that 1975 area. Then we've got that trading window up to that key 2000 price point, getting above 2000, then we're up to that sort of 2050 and up to those highs. So again, looking at this in piecemeal sections, similar to silver on that recovery run. Now if we have a look at Kiwi against the Swiss. Now on Monday we were talking about this as opportunities week. This is starting to play out as expected, so it's quite nice. There is also plenty of move left in this market. You can see the move here on the monthly chart, still got plenty of distance to go. So again, we can see that we've got this breakout of this neckline here on the 4-hour chart. There was also quite a nice level there on the 60-minute chart too. So again, looking at opportunities for a continuation here of this market. Now, similar on this one, the Kiwi is particularly weak at the moment, and we've got a strong euro as well at the moment too. So we can come over to Euro Kiwi and start to have a look at some quite nice price action starting to form in this market, particularly since it's sort of broken out of this consolidation here on the 4-hour time frame. But the thing that's really attracted me to this is that from a macro perspective, this is breaking out into new structures, and you can see that we're breaking out of this sort of range that the market's been stuck in for a while on the weekly chart. Getting above here really starts to open this market up, and if you take a look at this on the daily time frame, we can see that we're in a new trading window here on the daily. We've got good strong momentum in the market, so we're looking for this trend to continue and looking for moves up to the next decision point here, which is around 1.823. So there's a few markets there that we're keeping a close eye on in the trading room going into the second half of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.